Our next speaker is Michael Mainelli. Michael is a scientist financier trying to promote societal advantage through better finance and technology. His keynote asks the question, what will fintech do in the climate wars, Daddy?
Good morning and welcome to Fintech Week London, and I am delighted to be here with you. The title of my presentation is, What Did You Do in the Climate Wars, Daddy? And I chose this particular image from 1915, which was a recruitment poster for the Great War. And you can see here a father, as his daughter asks him the question, what will fintech do in the climate wars, Daddy? And his son is playing with soldiers. And you can see that they're clearly trying to play on the father's guilt to get him to enlist. Well, I'm here to help you enlist, but I think there are going to be some subtle points that I'll be making today. Enlistment has gone far beyond awareness. I think many of us are acutely aware of climate change and its importance. Enlistment has gone beyond talking about nice products and environmental and social governance measures. It's really moved towards doing things about it, and fintech has a key role to play. So what I'd like to do this morning is to cover really green so far, what has been going on with particular relationship to finance, point out that there are different views, not necessarily consistent about what needs to be done, what are some of the roadmaps, and two areas where I think fintech can make a big difference that have been partially overlooked. Well, the first thing is the story so far, and I'll take that story really from a City of London perspective. Back in 1953, some almost 70 years ago, the City of London actually passed the very first Clean Air Act. This was followed up by a National Air Act a couple of years later. And the city has been always active in the environment and climate change. So a lot of people who have been talking to me from the environmental community, of which I've been a part for well over 40 years, have often said to me, what is the city doing about climate change? What is the city doing about the environment? And I've spent a large amount of time trying to share with them the immense amount that has been done over what is now amounting to nearly seven decades. In particular, I might point to initiatives such as the London Accord, which has been sharing several hundred reports that are done in financial services about ESG issues, a lot of work that has been done by the City of London in proposals to COP, etc. But I would pick out one thing that many people aren't aware of, and that is that back in 1997, COP3 at Kyoto concluded that what we needed to do was to trade carbon, cap, and then trade it down. And that was the global decision at that time. And the City of London took that very seriously, publishing a paper in very early 1999 called What Emissions Trading Could Mean for the City of London, and initiated the carbon trading shadow market, which later became the EU emissions trading system in April 2005. So the city has played a large part. But what do practitioners think today? Well, sadly, this diagram shows you a whole bunch of things that could be on their mind, but two very clearly stand out. Policy and regulatory frameworks, they're on the bottom left, and up at the top right, climate change PR. So what they're not talking about is rates of return, industry research. What's really dominating them is what are politicians doing about policy and regulatory frameworks, and what does the public think? How intense is our anxiety over climate change? And what this really shows, I think, is, and the reason I think it's sad, is we don't have specialist finance areas such as shoelace finance. We don't have specialist finance areas such as flooring finance, but we do have specialist green finance. And why is that? Well, it's principally because policy risk is the biggest risk in climate change investment. And this, I think, is to our detriment. I would like, ultimately, green finance to not exist, that in fact it was embedded with normal finance, and that will be a theme. On the bottom right, you see the Global Green Financial Centers Index. This has been issued 7 times now, and has really been tracking what's on practitioners' minds. And very sadly, this has not improved over this last 7 editions. So I'd like to talk briefly now about 2 areas where people think that they're making headway, and I would question it. I'm not anti it, but I'll question it. And that's regulation and ESG initiatives. And then I want to talk about 2 areas that I think are overlooked. So when we look at regulatory initiatives, this has been agreed in the run-up to COP26 in Glasgow in November as what banks and other large financial institutions ought to be doing. It's very directed towards reporting and risk management and really a very top-down regulatory structure. And a lot of this is based around a theory that if we can raise the cost of capital for bad firms, people will invest that capital in firms that are not bad. This was the theory that underpinned apartheid, in which many of us marched many years ago. It's an interesting theory and it might work, but what it seems to be doing is to be driving a lot of firms into the hands of private equity. What we also see as we come on this regulatory initiative is some very funny questions like, how do banks decarbonize their balance sheet? Well, why should banks decarbonize their balance sheet? Why does their balance sheet make any sense if it's carbon intensive? The second area that people are playing at is environmental, social, and governance. And we have huge hordes of jobs for the boys and girls running around and writing reports that sit at the front end of the financial accounts. Now, ESG has had 25 years to work already, and as you're well aware, climate change emissions continue to rise. Further, it's still an extremely confused area, referred to by many publications, The Economist and the FT, as an alphabet soup of various acronyms. MIT's Aggregate Confusion Project found that companies in the top 5% on one ESG rating algorithm could be in the bottom 20% on another. And major firms like Shell were wandering all around these indices. So ESG and regulation, they certainly have a role and a place, but they're not going to get us there. And this is where I turn to what I would call multiple views. So we have a lot of top-down views, regulate it and force shareholders to increase the cost of capital. But we also have other micro areas. Taxation is always popular. Anytime we see something on television that involves economics, taxes are invoked. But most importantly, we want to internalize. That was exactly what COP3 was trying to do in Kyoto. It was trying to put a price on carbon. And you would therefore not purchase a product that was expensive in favor of one that was cheaper, because if the first product was more expensive because it used too much carbon, you would go to the cheaper product, therefore encouraging the producer of the first product to reduce their carbon costs. And this is a normal way to handle an economic problem. So I would encourage us to be looking very much at these bottom-up rules, some taxation, but principally, when we're referring to the climate change wars of this talk, principally to putting a hard price on carbon. Now, the governments of Europe did try to do that, launching in April 2005 and claiming that they would keep the carbon price above 25 euros a ton. That failed because they issued far too many permits and the price crashed in late 2007. But they've gotten themselves under control. They're issuing fewer permits. They're covering about 40% of emissions, and the price is now hovering close above 40 and close to 50 euros a ton, the cost of which then makes people change their behavior. And this was, in fact, what we wrote in the City of London back in 2007. These are exactly the same policies in 2007 that we would recommend in 2020 or 2021. Focus on the carbon market, avoid carbon dumping wars, use standards to improve people's use of technology, and support more research in some of the other areas. The second thing is I spoke about policy risk being the distinguishing risk in green finance. That's the one thing that makes it different. If I'm building an offshore wind farm or installing a solar plant, frankly, I'm facing normal project decisions. Find a site, figure out my costs, figure out how much I'm going to be able to sell, who I'm going to be able to sell it to, and the price I'm likely to sell it to them upon. The one difference, though, is, of course, government policy changing. And government policies have changed enormously. Germany, for example, shutting down nuclear plants, Spain reneging on, and the UK, for that matter, reneging on solar subsidies that had been promised. What I believe that we need to see are what I call policy performance bonds. These are very analogous to an inflation-linked bond. Government has a policy on inflation. It says inflation will be 2%. If inflation is 3%, then the bond pays 1%. If inflation is 5%, the bond pays 3%. If inflation is below 2%, there is no interest paid on the bond. We can do the same thing in the carbon wars, and this, I think, these would become effectively bond cuffs that would force governments really to adhere to their own word. This would allow, therefore, longer-term investment. So if you take 2050 net zero as your target, you can see on this slide, you're looking at a reduction of about 3.45% per annum. So if in a couple of years it hasn't decreased by nearly 7%, then we would pay interest on the difference. If it had decreased by more than 7%, it wouldn't. And you'll see here, if you were really off target, for example, only decreasing by 2% a year, that's that black line on the top right, you can see the interest rate creeping up very steadily and strongly in the orange bar below. We believe the governments do need these policy bond costs, and it's something that our firm, Yen, and the Long Finance Initiative have been promoting for nearly 17 years. But they have finally taken off in the private sector, largely due to some support from the French government. And we've seen Danone, Louis Dreyfus, Nokia, Enel issuing these bonds. They're called policy performance bonds, performance incentive bonds, sustainability-linked bonds, ESG-linked bonds, or SDG-linked bonds. But it's all the same idea. You're tied to the outcome. You're not looking at the use of the proceeds. You're looking at whether the target is achieved. And these would be a natural hedge to bring in people investing alongside government initiatives rather than spending their time doubting whether government means what it says. And this is important because as finance people, we should be able to multiply two numbers together. And the two numbers I'd ask you to multiply is the average emission per capita across Europe. That's about 7 tons. And in the UK, it's about 8 tons. I mentioned earlier the current price is hovering near 50. So that is 350 or 400 euros per person per year. So you're looking at nearly 2,000 a family. And many people, given that the emissions trading system only covers approximately 40% of emissions, believe that that should be a bit higher, probably double. So we're looking at some significant numbers that politicians really don't want to talk to you about in the neighborhood of approaching 1,000 euros per Briton or European per year. So those multiple views, I think, are important. We need to really internalize those costs, and therefore green finance doesn't need to be green. It's perfectly normal, and people are making normal economic decisions. Well, what's this all got to do with fintech? Well, there are many roadmaps out there, and you could broadly say that we have 5 things to do. Decrease our energy consumption, decrease our transport consumption, handle domestic dwellings, handle commercial dwellings, and deal with agriculture. That's broadly the 5 big areas. We've wrung probably as much as we can out of energy, and most of the improvements to date have been energy related in terms of renewable energy supply. But roadmaps differ, and I would encourage people in fintech to think more broadly than the science and the technology. Take, for example, here, Vox's alternative, where they're looking wider at sustainable development goals, and they believe that the 6th most important thing you can do to help avert climate change is to educate girls. So after awareness, you're aware, what do we do next? Well, if you take my idea that we need to do bottom-up, then we're looking at trillions of bottom-up decisions rather than, or as well as, top-down pressure on capital allocation. And because of this, we turn, therefore, to computers, because trillions of bottom-up decisions require us to compute. And we need that assistance. As people, we need the assistance of devices to help us make those trillions of decisions that are going to be required over the Internet of Things, as subtle as turning on and off all of the electricity in your house, deciding what time of day you wish to travel. These are the basic decisions that need to be made, and there are many, many smaller decisions behind them. And this, of course, is ideal for artificial intelligence, machine learning, dynamic anomaly and pattern response. Call it what you will. What we need to do is to have those decisions embedded in real systems in real time, helping us. And this, I believe, both those embedded decisions and the embedded financial decisions alongside it, is the real opportunity for fintech. And if we could help people make trillions of decisions better, then the world would be a better place. And so I think the first benefit that comes here is better decisions about sustainability. And there are lots that we overlook. Filling that empty seat on a bus, finding the right flight pattern that means that you spend less time in the air. Lots of decisions like that are very related to financial decisions. You wouldn't take a more expensive flight if you could avoid it. And if that flight cost is related to your emissions, then you will make a better decision. One of the things I frequently point out is that in America, back in 2013, Americans drove 4% fewer miles that year. Was that because they were finally listening to the Sierra Club? Certainly not. What they realized was that the price of gas, as they say, petrol, had risen by 32%. This is what will really change people's behaviors. And it's already here, trillions of tiny financial decisions. This is an example of DeepMind's AI reducing Google's data center cooling bill by 40%. Was this done for climate change purposes? Maybe. Was it done to reduce their cooling bill? Definitely. And what's the difference? Cooling bills being reduced is the same as reducing energy consumption, and that's what we need to focus on. Another area you might not think of as fintech is something called the Ocean Protocol. What they're trying to do here is to create markets for artificial intelligence. You'll also see that there's been a tremendous amount of talk about smart ledgers, blockchain, distributed ledger technology. I see these as multi-organizational databases with a super audit trail that can have some embedded code. And I'm not here to sell cryptocurrencies. In fact, if you read what I've written, I'm no fan of cryptocurrencies whatsoever. However, I do believe that these ledgers have an enormous role to play in allowing us to work together by basically providing something that's been missing for ages. When we look at our typical stacks of TCP/IP, the sort of Internet of Communications, we then move up into our logic levels. What we miss is what I term the Internet of Record. How do we know that somebody did something? And these smart ledgers provide us with the ability to track and trace supply chains globally. Here's an example using a system called Chainsy of people on the southwest of England tracking and tracing from really fishing to plate landed fish and trying to do so in a sustainable way. These types of ledger applications are being used in areas like swapping electricity bills, swapping people's usage of renewable forestry, etc. So as I turn to close, what's fintech ever done for the planet? Well, the first thing I would point out is that there's a lot that fintech can do. This slide here contrasts economy, efficiency, effectiveness, and innovation against areas like time, place, function, and consumption. And we've seen that there are many, many opportunities here to pile in and use fintech. In particular, on the right, I believe that there are enormous opportunities to be using dynamic anomaly and pattern response systems of all kinds in the carbon markets, energy storage, logistics, the grids, smart land use management, and smart cities, urban planning and design. There's an enormous world of opportunity out there for people in fintech who want to get into it. And what they need to understand is that what we're really looking at here is markets. And that is what fintech is about. So I believe that we're going to be moving much more from areas like transactions across borders, banking and payment systems, into engaging with the real industry, the real economy on the Internet of Things, and embedding within that the financial decisions that go alongside the operational decisions. So market measures are essential. We need to ensure that there's competition, open data, better regulation, and standards out there. Fintech people should be lobbying to get rid of green as a special category by costing carbon and making governments face up to their own policies. I believe that the biggest area of fintech that fintech can help in is helping those people make better decisions tied to small financial decisions. The second area is, as I said earlier, supply chain tracking, including the capital supply chain, which does touch on ESG, I grant. I'm not I'm doubtful, I guess, about the ability of RegTech or ESG or voluntary carbon markets, but I'll let people prove me wrong. But finally, for FinTech, the implication is really we need to shift from focusing on putting transaction front ends on saving products and banking products to moving to trading and IoT markets. So from putting lipstick on banks to mini Bloombergs for the masses. So in conclusion, how would we know when our commerce is working? How would we know when FinTech has contributed? And I think that's when we can look our daughter in the eyes and tell our children that we were proud we helped win the climate wars. Thank you.